Hello everyone, welcome to today's podcast. Today we are going to discuss about the proposals put forth by the 56th GST Council. We have with us CA Kapeel Bhandarkar, one of the very accomplished CAs of North Karnataka. Together we will deep dive into the various issues, intricacies and compliance portions which will come in the future on the basis of the recommendations of the GST Council. We will also try to understand what the new GST, that is GST 2.0, holds for the consumers, for the business owners and as well as for the chartered accountants. So I now welcome CA Kapeel Bhandarkar and let's understand what the GST holds for us in the future. Hello everyone, I welcome you all to this podcast where we are going to discuss about the GST proposals proposed in the 56th GST Council. I am sure we all have read to the proposals and we have a lot of questions like how the transition date is going to be and the various other initiatives which are being discussed. Today we have CA Kapeel Bhandarkar.
Thank you, sir.
He is as mentioned, he is a partner at D. Shantilal Jain and Company. Kapil is going to enlighten us about the intricacies of each and every proposal in the GST 56th GST Council meetings. So first, Kapil, as we know that there are so many proposals which have been brought out. How do you interpret these proposals? I want you to elaborate on both from the customer point of view as well as from the business point of view.
Okay, where we stand today is something was announced on August 15th and on September 5th there was a declaration from a council, or September 4th declaration from council as to what will be the propositions. Now when it is effective? It is effective September 22nd. As a customer or as a citizen, it's a very bold step from any of the government to reduce a tax rate, because it will have naturally an impact on a revenue stream. But according to their press interviews, it is like considering that demand will increase by the reduction in rate. So as a consumer, everybody is expecting rate to reduce on various goods, and is postponing his purchases after September 22nd also. May it be car, as big item as car, or as small item as shampoos and soaps. So the consumer expects reduction in rates. As far as business goes, business today knows certain details and will wait for notification for further details, and they have to do certain things like input reversal, stock counting, adjustment. That means basically realigning their businesses as per the GST changes, and moreover they have to join hands to the government in passing on this benefit to the end consumer, so that ultimately what government wants to achieve in the form of increase in demand and collection of overall taxation, that and economy boost may come true.
So you mean to say it is a win-win situation for both, consumers also win and business also win. Great. Now Kapil, as a business owner, I would want to know what is the fate of the credit which is lying in the electronic credit ledger as on the date of transaction, that is 22nd September, I have a credit balance. What happens to that?
Okay, there are three cases possible. One, there are rates have reduced either from 28 to 18 or 18 to 5 or 12 to 5. Or the second case scenario is where the rate is reduced such a way that the goods or services are exempt. Third case scenario is where rates are reduced with the condition of no ITC, with a restriction on ITC. If you take first case where there is a reduction in rates, then ITC, credit ledger ITC, no need to worry about that, it continues as it is. In case of where the goods or services becoming exempted, then whatever is the ITC on stocks available needs to be reduced or reversed. Second, if any capital goods wherein 60 months or 20 quarters are not over, such capital goods ITC needs to be reversed as far as if the goods or services are exempted. Now coming to third scenario where ITC is reduced, rate of tax is reduced with the condition of restriction on ITC, then the capital goods ITC needs to be reversed provided such capital goods are not 5 years old.
Right. So now since the rates in many of the products and services, we see that the rates have come down. So can I as a business owner use this as a tool to increase my profit margin so that my end product or end service value anyhow it remains the same?
There is no legal restriction on what price to charge. It is left to the open market. However, in good, if you are specifically pointing out to anti-profiteering, today it is not a legal provision, which is as a law needs to be monitored or controlled by government. But according to me, law needs to be implemented or executed in spirit. So as a businessman, if you transfer that benefit to the end customer, in comparison with your competition, you may see an increase in demand, and naturally that whole benefit passes on to you. But as far as legality goes, there is no legal restriction on what price to be charged.
So you mean to say government has put the faith on the business owners to ensure that they pass on the benefit of the reduced GST to the consumers?
Absolutely.
Right. Now as a business owner, the transition date is 22nd September. So what precautions should I take with respect to billing or with respect to stock keeping or any other such methods so that I am in compliant with the revised GST provisions?
Okay, one thing, when does this gets impacted? It is September 22nd. Now, what is the, if I make a sale on 23rd, do this new rates applicable? This is the question in mind. So, you need to consider three aspects. One, date of invoice, date of payment, and the day in which goods is delivered or service is rendered. So, we call it as 2 out of 3 rule. In this 3, any 2 falls in before period, then old rates will be applicable. If any 2 falls after the rate change, that is after September 22nd, then new rates will be applicable. So, with this thing in mind, what precaution do I take? I need to understand what is my these 3 aspects of each supply after September 22nd is one thing. So, I understand rate of tax. Second, I need to calculate 22nd September stock, if preferably on HSN basis, so that I understand if there is any ITC reversal, how much of the ITC needs to be reversed.
Great. So let's come to the industry specifics now, Kapil. Now with the hotel accommodation, which was earlier at 12% with the ITC, now the government has proposed to bring it down to 5% without ITC. So how do you see it impacting the small hotel industry business?
Okay, now what has happened, earlier it was 12% with ITC, even if I was charging somewhere close to 1000, 2000, up to 7500, and above 7500 it was 18%. Now they are not given an option, but they are forced to change it to up to 7500, they are forced to change it to 5% without ITC. Now how does it impact my basic input structure is, I will not be getting any input on capital goods, inputs and input services which I will be availing. Furthermore, I am required to reverse the ITC on capital goods which I have bought it before, at least whose term 5 years is not yet over. So this will increase their cost. That cost may be loaded to the end customer. Probably with that load also, that may not cross 12% old rate. So my view, it is a compliance issue for one who has no room rent below 7500.
So you mean to say going ahead, travel is going to be cheaper?
Yes.
Right. So that's some good news coming for all of us. One more burning question, which is among all the restaurant owners. So if I'm a restaurant owner, can I go ahead and say that I'm going to charge 18% on the food bill, and I don't want to go into the 5% without ITC?
This choice is not left to the restaurant owners. It is made a compulsion. They need to charge 5% without ITC. Is the only rate now available to restaurant owners. one thing, they can collect that from the customer.
Great. So now coming to another sector of transportation. So now with the goods transport agencies and the transport containers, rate has been reduced to 5%, or they can go up to 18% with the ITC. So now how do you see that impacting the overall transport business, and moreover, how does a transporter choose which option to go to?
Today GTA is a sector which has changed frequently from 5%, 12% without ITC, with ITC, 18% with ITC, then 12% ITC, then option to him to choose between the two, that too made only once a year. All this, considering all this, today where it stands is, now going forward we see a regime where 5% without ITC or 18% with ITC. So naturally it is the increase of 6% in the cost of transportation, but generally it is B2B, so the customer gets an input out of it. Second case is he cannot change it in between the year, so he need to take a option at the beginning of the year itself. So probably he has to look back at his contracts, look back at his composition of customers, and consider if his total inputs is more than 6%, because 6% I am getting it from 18% minus 12%, so 6%, then he may stick on to still 18% with ITC. He may, again, this cannot be a straight jacket concept, he need to again check on his customer, because if someone is taking an input, so he don't mind paying a 6% more. So considering such situation, I see many small transporters who are currently at 5% without ITC staying there, and there may be an increase in such transporters number who will shift to 5% without ITC.
So you mean to say the small transport owners, it's better to go back, see the agreements and talk to their customers, and if required they need to renegotiate the terms. Great, lovely. So now one more sector which has been quite anticipating the new rates is the automobile sector. So in the new as per the new proposal, the cars and two-wheelers, they have kept a limit on the CC and the width of the vehicles. So please elaborate on how it is going to impact the GST rate.
Now this is the more discussed or more hyped version of GST change, wherein car buyers are told to have a Deepavali gift or Dasra gift. If you break it into segments of car and two-wheelers, four-wheeler has two categories again. Petrol, it is 1200 cc and 4000 mm of width is and below is categorized as small vehicles, and above is categorized as SUV or high-end vehicles. And in case of diesel, that 1200 cc gets replaced with 1500 cc. Now any car which is categorized as small vehicle is shifting from earlier regime of 28 plus cess regime to reduced at 18%. So straight away they are getting a benefit. Second case, in high-end vehicles or in luxury vehicles, it is 40% tax from earlier regime of 28 plus 17, 28 plus 13 kind of a cess. So naturally anyone buying a car will get a reduced rate after 22nd of September. Now look at from point of view of a automobile dealer. He was earlier paying cess, IGST, CGST, SGST as the case may be. Now he ends up paying a GST only. What happens to the biggest problem to him, or biggest problem lying to him, is what happens to his cess credit which is lying in his ITC ledger. Today as it appears, there is no, it becomes his cost. In natural justice there should be some mechanism given by government which they have not yet given, probably in the form of refund or that getting credited to some other credit ledgers. So if you are an automobile dealer, you need to work upon your stock, what is in your ITC cess ledger, and plan your sales from 6th to 22nd in such a way that your cess credit ledger reduces substantially or becomes zero. Maybe you may need to reduce your or zero on your purchases, because it is easier said than done. It becomes Mahapaksha or Pitrupaksha, so people don't buy in this period of time generally. And then there is one more hype coming out saying that this cars will be cheaper, which is truth also. So people may postpone the purchases. So it is a very difficult task for some automobile dealer who has cess ITC in his ledger. Coming to two-wheelers, 350cc and lower, so will be at 18% from 28% earlier, and anything above 350cc and above will be at 40%. So 350cc and lower two-wheelers get cheaper, above it will become costlier.
So you mean to say that government has made a clear distinction between vehicles, what are affordable vehicles and what are luxury vehicles.
Yes.
So affordable vehicles are to be charged at a lesser rate and luxury rates are to be charged at a highest rate possible. So next, with respect to the apparels, as we know that with respect to the apparels costing less than 2,500 have been, there is a proposal to charge a lesser rate, and to above 2,500 it's a different higher rate. Now when I say 2,500, is it the MRP value, is it the invoice value, or is it the pre-discount value? What is that 2,500 which I have to charge GST?
Okay, I will answer this along with footwear. What was earlier in textile was 1,000, below 1,000 it is 500 rupees. When I mean textile, I mean ready-made garments. Below 1,000 it was 5%, above 1,000 it was 12%. So this 1,000 card has moved to now 2,500. So 2,500 below it is 5%, 2,500 above it is 18% and not 12%. Earlier for footwear it was 1,000 below was 12%, 1,000 above was 18%. Now it has changed to 2,500 below 5%, 2,500 above 18%. Now what is this 2,500? It's a sale price. When you mean sale price, I understand it as a transaction value. When I mean it as a transaction value, it is a taxable value. If my taxable value is less than 2,500, it is 5%, and if it is more than 2,500, it is 18%, both in case of footwear and ready-made apparels. How it may impact is what the what you call the fence-sitter products. From 2,500 to 2,600, the value change for 100 rupees of change, rate of tax change will be somewhere close to 130 rupees.
Okay.
So that will be a bigger challenge for a dealer.
Now coming to the medical sector, Kapil, what is going to be the impact on this revised provisions on the pharma industry?
Okay, in medical sector, I divided it into two parts. One is service, one is goods. First of all, the most discussed one or most politically popular service, that is life insurance and health insurance. So life insurance and health insurance are now exempt. Does it mean the low cost to the consumer? On mathematics it should not be, because ITC available to a policy company is now a cost to that life insurance or health insurance policy company. But recent entries of finance minister says wherever it is a government run PSU which is providing health insurance or life insurance, price are going to be at a level with considering the GST benefit totally passed on to the customer. So naturally their competitors also will give reduced rate, so end customer gets benefit out of it. Coming to person who is dealing in pharma products, now goods, some goods are now exempted, life saving equipments are exempted. So in such case, if I am a dealer in it, again the rule of ITC reversal will apply to me. I have to forego such ITC which I have claimed as a which I paid on the goods available for sale on 22nd September. So as a dealer of pharma products, maybe I may reduce on my purchases till September 22nd, then reduce as much of stock till September 22nd and buy later, so that my ITC is not blocked to a large extent.
Now coming to the works contracts, where the new GST proposal says that in case of works contract where there is 75% or more of earthwork provided to governments, or in case of subcontract where the main contractor has given service to the government, the rate of tax has increased from 12% to 18%. So in this case, what are the precautions which you suggest the works contractor should take?
Okay, again, this sector is something which has undergone various changes in last 8 years. There were in the beginning every rate possible to a works contractor rate, maybe 5, 12, 18, and in some cases exempted also. Later it got changed, then it was streamlined as to some portion were moved to 18, some were kept at
Yes.
12. Then many of them shifted to 12 at one particular date in the mid of January. So all this has seen it, and every time there is a rate change, as in this case where 12% has moved to 18%, they will have two challenges to adhere to. One is they have to renegotiate the rates, which is again a Herculean task, because with the government X rate is agreed with the GST. Without GST, there may be a contractual needs to be again re-looked into, and they have to renegotiate or get that escalation or differential pricing from the government. Is one challenge they have to meet out. Second challenge, what they have to do is they have to calculate the rate of tax. In any change of tax, what rate of tax is applicable? In case of construction works contractor, generally there are three. One, RA bill date is considered as a date of service provided. Date of payment will be in majority cases after that RA bill date. In third case, which is invoice date, which is under control of the contractor, these all three aspects will be looked into, and they can charge old rate or new rate depending upon 2 out of 3 rule. That means any in these three, any 2 is earlier to September 22, old rate is applicable. Any 2 is done or provided after September 22, then new rates are applicable. So these two challenges I see in case of this.
So basically, you mean to say 22nd September becomes a very crucial date. So if there is any either money received or completion of service or invoices, any of the event happens before 22nd September, then the old rates apply, or if otherwise the new rates will apply.
Yes.
Right. Now, with these are with respect to the sector-wise changes. Now, the government has also come up with one more proposal where they want to simplify the GST registration, because GST registration has become a pain point from long. So, there have been a lot of grievances raised by the general public as well as the business owners that GST registration has been quite a cumbersome process. And now government has come up with the new proposal for granting the GST registration. Can you please throw some light on it?
Yeah, GST registration has been a play around between, or a balance between, controlling the unregularized dealer and also making the process simple. So this process should be simple, yet there should not be it should not be an easy element for what you call fake dealers to enter in. So with these two objectives, government has been trying many things. There has been other authentication, there has been physical inspection, there has been biometric. There is one more good step which has taken. Say any fake dealer will not pass on a small amount of ITC is what is assumed, and what they have done is, if I give a declaration and I state that my ITC passed on, that means in case of B2B supplies of my B2B supplies in the future after taking a GST registration will not be more than 2,50,000 in tax value, not taxable value, in tax value, then I will be provided registration in 3 days. Now question arises, if I give a false declaration, what happens? So this is not yet clear, but let us find good in what is said. So my view, they will, and how many months can I pass 2,50,000 of input tax credit? That is also not clearly stated. So that will be again devil in the detail. So my view, 6 months, 2,50,000. If I assume that I'm a small trader, my input tax slab, or I'm a trader who supplies only to the customer, I'm a small shop, then I can get a registration in 3 days without any hurdle. So a good step. Again, there will be feedbacks on this, and again that will also improve over a period of time. But good step towards a balance between easy registration and avoiding a fake biller to enter.
So basically now for these new GST registrations where the turnover is expected to be less, so there the registration is going comparatively faster.
Faster, and it can be less than 3 days.
Great. Oh. Now coming to the next aspect of the proposal, the government is with respect to the post-sale discounts. It is understood that the government is proposing to change the nature of the taxation or the ITC reversal in case of post-sale discounts. So can you please throw some light on how it would be in future?
Okay, the way I understand it through the council meeting recommendation, again, circulars can be much more. This you can treat it as a trailer of a cinema, and what is the wording used in notification will be a final cinema in itself. So from the press release, what we can understand is earlier there was restriction on output reduction subject to reversal of ITC. That is, I as a supplier can reduce my output if the service the recipient reverses his ITC. So now that is done away with. Now the onus has shifted to the recipient. If I reduce my output, he has to reduce his input. So from section 15 it has moved to 34. So where he is made liable to, probably from 15 it will move to 34, where he will be made liable to reverse the ITC if the supplier reduces his output and passes a GST credit note. Now there are being two credit notes which we have been seeing. One is GST credit note, one is financial credit note. Financial credit note, I mean where there is no GST impact. Now there is one more line which is added in this press release, which is more concerning or which may trigger various litigations. Is this post sale discount passed on as a financial credit note will be treated as an additional consideration passed on by the manufacturer to the dealer for the supply from the dealer to the end consumer. I repeat, it will be treated as an additional consideration passed on by the manufacturer to the dealer for the supply made by the dealer to the end customer. Now how does it impact? It clearly states that it from a reduction in input for a dealer, it has become an outward supply. Okay, that can be understood, and suppose he pays tax on it. Now at what rate? Maybe the rate of goods. Now to whom to bill? Because my end customer are more, my discounts are flowing from one particular manufacturer. So do I charge it to bill it to a manufacturer? If yes, can he claim the ITC for which goods is received by end customer? Probably no, again litigative. Then if I charge it to end customer, how do I proportion that discount? Again thought process need to be put into this to understand how it will move forward. But this is something which everyone have to check, because many industries like electronics, let it be mobile or laptop, run on discounts. In trade cement runs on discounts. Generally the price charged to end customer is less than the purchase price by the dealer. So in such cases, this post discount is going to have a very big impact, which each one of the person in supply chain, maybe manufacturer, maybe dealer, maybe a sub dealer, maybe all these people have to sit down and chart out as to how to simplify this.
Great. Now we have one more thing which I would like to know, which is probably the question for most of the business owners, is since 22nd September is going to be the transition date. So what precautions should I take with respect to invoicing, with respect to my maintaining of my stocks, with respect to my ITC, and more importantly with respect to my monthly returns? So what is the thing which I should consider, especially for when I am filing the GST returns for the month of September 2025?
This change is not brought out at a month beginning or month end. It is brought out at the day of auspicious day of beginning of Dasara. but it doesn't happen to be a month end or month beginning. So it is at a mid of the month. So for the month of September, return will be going to be complex. The compliance needs to be very cautiously done. What comes to my mind, or what precautions one can take, is prepare 2 sets of IT documents for GST details. For example, input register before 22nd, after 22nd, output register before 22nd, after 22nd, RCM register before 22nd, after 22nd. Moreover, he need to capture, a dealer need to, or dealer or a trader or manufacturer need to capture his stock position as on 22nd. And for a smaller dealer it may be difficult, but he still may have to do stock count at on HSN basis also, so that if there is any stock reversals, he will be able to do it with a good amount of accuracy. Further, one more thing, where there is a delay in payment, or the time of service provided and time of payment is different, or time of supply or time where goods are delivered and payment is received are different, they may need to link the transaction before September 22nd to transaction after September 22nd. For example, if I receive a payment on September 23rd for a good supplied on September 21st, so I need to apply the same 2 out of 3 rule when the invoice is made, when the goods are delivered, and when the payment is made. All this precaution needs to be taken for at least 1 month from, depending upon industry, so 1 month from September 22nd, so that returns are accurately posted in the GSTN website.
Great. So now we have got very a much more clearer picture that what is going to come in the new GST regime. So what I understand, Kapil, is the government is trying to definitely benefit the consumers. There is a lot for the consumer to expect in the coming days. With this, the businesses also will have to realign their business practices with the changes in the GST law. Further, what I also see is that the government is making a clear bifurcation between necessity goods and the luxury goods, like be it apparel, be it footwear, or even automobiles. So there is a clear bifurcation. Government sees that this falls under necessity and this falls under luxury. And as you rightly said, probably once we receive the notifications, the devil is in the details. So we will get a much clearer picture of what the businesses have to do in order to comply with the revised GST guidelines. So with this, I bring to an end this podcast. I profusely thank CA Kapeel Bhandarkar for sparing his time and his knowledge to all of us. Thank you, everyone.